Most people still think you need thousands of dollars to start investing in Canada. But the truth, you can begin with as little as $100, and the earlier you start, the better your future self will thank you. In this video, I'll show you exactly how to start investing in Canada with just $100, the best accounts to open, the simplest investments to pick, and the biggest mistakes to avoid. And stay till the end, because I'll share a realistic strategy that many Canadians are using right now to grow wealth even when the economy feels uncertain. Let's start with the why. Leaving your money in a savings account today might feel safe, but it's not growing. Even though inflation has cooled to around 2.5%, the average high interest savings account pays about 1.5% to 2%. That means you're barely keeping up. And over time, your money is quietly losing purchasing power. Investing, on the other hand, gives your money a job. Instead of sitting still, it works for you in businesses, in real estate funds, and in global markets. Historically, Canadian investors who stayed consistent, especially in low cost index funds, saw their money double or triple over the long term, even through recessions. Before you buy your first stock, set up your financial foundation. Step 1. Build an emergency fund. 3 to 6 months of living expenses. This keeps you from selling investments during bad markets. Step 2. Pay off high interest debt. Credit card debt at 19% will erase any returns you get from investing. Step 3. Define your goal. Are you saving for a home, building retirement income, or creating long term freedom? Once those boxes are checked, you're ready to open your first investment account. In Canada, you have three main investing accounts: TFSA, tax free savings account. Any profit or growth inside is tax free forever. Whether your investment doubles or triples, you won't pay a dime in taxes when you withdraw. RRSP, Registered Retirement Savings Plan. Contributions lower your taxable income now, but you'll pay taxes later when you withdraw, ideally in retirement when your income is lower. Non registered account, no tax breaks, but full flexibility. Great if you've maxed out your TFSA or RRSP. If you're just starting, begin with a TFSA, and you can open one easily online with Wealthsimple, Questrade, or TD Direct Investing. Here's the step-by-step process to start investing in Canada with $100. Step 1. Open a TFSA through a low-fee broker. Wealthsimple is beginner-friendly and has no account minimums. Step 2. Deposit your first $100. Even if it feels small, it's the habit that matters most. Step 3. Choose a low-cost ETF, exchange-traded fund that tracks the whole market. Two great options are VEQT, Vanguard All Equity ETF, simple, globally diversified, and growth-focused. XEQT, iShares All Equity ETF, another solid choice with similar performance. These ETFs hold hundreds of companies, the ropes from Canada's big banks to tech giants like Apple and Microsoft, all in one investment. Step 4, set up automatic deposits. Even $25 a week builds serious momentum. Step 5, reinvest dividends. Most platforms let you do this automatically, which compounds your growth over time. Remember, don't try to time the market. Even professionals fail at predicting short-term swings. What matters most is time in the market, not timing the market. Let's be honest, the past few years have shaken investor confidence. Interest rates are high, rent and food costs are still rising, and people are cautious. But here's what forum discussions show. Canadians aren't giving up, they're shifting. Instead of stock picking, most are choosing simple, globally diversified ETFs. Instead of trying to get rich quick, they're focusing on steady growth and low fees. That's the mindset that wins long term. Let's talk about the beginner traps you want to avoid. Trying to predict market highs and lows. Even experts get it wrong. Focus on consistency. Invest a little every month, no matter what, putting all your money in one stock. Spread it across the market using ETFs. Ignoring fees. Even a 1% management fee can cost you tens of thousands over a lifetime. Choose low fee ETFs, withdrawing early out of fear. Remember, markets recover. Every dip in history has been temporary. Every recovery has been permanent. Here are some extra habits that make a big difference. Start early. Compounding turns small amounts into big ones. Automate everything. Remove emotion and make investing a routine. Stay informed, but don't panic. Read the news, not the noise. Review once a year. Reinvest dividends, rebalance if needed, and keep your focus on the long term. Let's say you invest $100 today and add just $25 every week. That's $1,300 a year. At a 7% average return, in 20 years, you'll have over $56,000. At 30 years, over $130,000. That's the magic of consistency and compounding. Even small amounts become serious money. So that's how to start investing in Canada with $100. The key isn't how much you start with, it's that you start. You don't need to be rich. You don't need to predict the market. You just need to begin today. If this video helped you, hit like, subscribe, and drop a comment below. What's your first investing goal this year? Thanks for watching, and I'll see you in the next one.